In order to mark our 7th anniversary, I have with me a very special guest, someone who needs no introduction. I've been interacting with him for over a decade now, and I've always admired Vallabh Bhanshali for his original thinking, his simplicity, and his contribution to society. Mr. Bhanshali, thank you for joining us. What a delight to have you back. We are interacting with you at a time when it's difficult to gauge the general environment. We've seen a crack in the month of Feb and March. We've seen a monster rally after that. In Feb, we were only discussing end of China. Today, we are discussing end of European Union. Why is the world such a fickle place?
These are big waves that are always a part of our life. They are not evident immediately, but a tsunami is building up for many, many years before it strikes. So I think there are primarily inequalities in the world that create waves. And so I think inequality in terms of political power, inequality in terms of financial power, the desire and ambition of people to bridge that gap. Once you start bridging that gap, then you want to, yourself become dominant and you want to be a hegemon. And I don't want to mention names, but you know what I'm talking about. And then you don't know how to create balance. So it is, I think these forces have been at play for a while. And then you have accompanying events, like you had the Iraq war, and that created a rupture in the whole process. And that was something unfortunate, artificial. And then we never recovered from it, actually speaking. So politically, that area is not settled. The financial damage arising out of that has not really got settled. One thing has led to the next. And we have managed to keep the show going. And in the meantime, we have seen much, much greater social inequality in the world. And this will manifest in many, many ways. Technology. Technology is something which is so extraordinary because what good it brings and what difficulty it creates. So in the short term, and in the long term, it will probably do all good. But in the short term, it also creates a lot of pain. Take, for example, while we did recognize the depression causing or the deflation causing capability of the Chinese growth. What is technology doing? Technology is bringing down to the prices of everything. It is removing inventory from everywhere, reducing redundancy. That means my demand for so many things is just going down. When the whole price mechanism comes down, it is also deflationary. Now, would we wish that we don't advance in technology? We do want to advance in technology because it improves life at so many levels. Economic measures are probably lagging behind. That today, the advantage that I have of, quickly getting on WhatsApp and communicating, I beat the difficulties of the networks, etc. How do I capture it? And it is free. The value it has added is not captured anywhere. Therefore, there are many challenges that we are facing, that the world is getting better in many, many ways. The economic measures are lagging behind and then, we are not capturing it. These differences, in terms of wealth, in terms of various kinds of powers, we are not able to measure. And therefore, if you can't measure, you can't even solve it.
So how does one invest in this kind of an environment? Because you want returns, innovation is at its peak, disruption is happening, the society at large has got rebooted. The desire to buy good companies is still there, but the stocks are quite expensive.
Stocks are quite expensive relative to the difficulties, and maybe people are not ready to sell. Even very, very smart people who are sitting on 30-40% cash, say Claremans of the world and others, they still invested in at least the balance amount in stocks, which is saying what? Which is saying that if we have to look for wise people to partner, they're still in equities. And these are the equities that are expensive. And they will remain expensive. Because if I am a passenger, as a fund manager and as a man with money, it's a difficult legacy. And I have to sit in somebody's chariot. I look for a charioteer. And those charioteers are still the great businesses, great business managers, who will find their way, irrespective of famine and flood, higher hail or sunshine. They will find it. So they think that it doesn't matter whether my stock will perform or not. I have given, as a fund manager, my money to someone who is even better than me and I will pay the price. And therefore the stocks, good quality stocks, will remain expensive in these crises.
Will that apply for a market like India as well? Because the Indian economy has this unique advantage, which is rates are coming down, economy is on a mend, and genuine green shoots are now visible.
I would not count on rates coming down really, and one should not, because I think India is a growth economy. We have structural weaknesses created over several decades and several centuries before that, and we'll still probably take some time to correct those. And in those circumstances, the rain gets delayed, prices can go up, some commodities, go into scarcity. Oil, we have finished having the bonanza. So therefore, I don't count really on interest rates coming down. But on growth, indeed. So given that, the theory remains the same, that the money still wants to sit in the safest chariot. If I'm going to go downhill, I'll go faster. So that's fine. That's an additional advantage. So in the argument remains the same, and maybe even more straightforward and more advantageous, because you have the tailwind behind you. And I see this tailwind really sustaining, and therefore I wouldn't like to think that Indian equities are expensive. Of course, if I can buy them cheaper, of course they're welcome.
Typically, bull markets, they always start when valuations, they look attractive, and then earnings, they surprise us. We've seen that happen in the previous bull market. So do you think we are on the cusp of an earnings recovery where the earnings surprise and the demand really will surprise? It's difficult to put in Excel and talk about it right now because your eyes cannot see that far. But your experience, if you can talk about your years of experience here.
So what you're seeing is that, for example, take an HDFC Bank, and companies in that category.
The bluest of the blue chip.
The blue chips in various sectors, and not only in banking sector. People are very willing to invest in them, and they've remained invested. Some event or the other may bring down a price of a particular stock, but the people are back onto it immediately. And I think that predictability in the Indian economy has grown tremendously over the last few years. That people will want to take a 5-year, 10-year, 15-year view and invest in those stocks. And therefore, given the fact that that excitement moment was probably in March, April 2014, when people suddenly thought that we will get a stable government and the market took off, that kind of underinvestment is gone. The market is, people are fairly well invested, except the common man, unfortunately. And the retail surge may come, but the values are not really of a distressed market where both can happen at the same time. So now only earnings growth will happen. That will not create that kind of momentum that we have finished seeing. So, but that's okay. I think in a growth-starved world, if you're still growing at 7.5% or 7% also over a long period of time, and our earnings growth is of 10-12%, I will still make handsome money. And I as an equity investor, my ambition or my expectations of the market are coming down all the time.
What has worked for us in the past, and the complexion of the Sensex is such that it will always grow in a handsome multi-digit return, because sometimes it's IT, sometimes it's pharma, sometimes it's domestic stories. But what has worked for us in the last couple of years is this combination of a weak dollar and growth in IT and pharma. That could be coming to a standstill for a variety of factors. So where do you think the momentum now will come for the economy, for the markets?
If the economy picks up, the whole economic cycle that, it starts going into infrastructure, housing, and then it goes into consumer and durables, and then the whole cycle plays out. I think the same cycle can play out brilliantly now. And you've seen early moves in Larsen & Toubro produce one slightly better result, and the stock is off. So the contracting companies are already being targeted. There are people who are, recommending real estate stocks and things like that. So I think new cycles will happen. And I think, while the dramatic stories seem to create an impact that, something unique has happened, but they're all a part of the same cycle, that the knowledge sectors take a lot of time to ripen. And then they produce those rewards. Because they take a lot of time to ripen, people do not see the advantage of those stocks. And so also that, when relatively economy is going through a structural change, some of the stocks or some of these sectors like infrastructure, real estate, etc., they go into a deep slumber. But they also emerge, and they also emerge strongly, So I think it's very likely that some of those sectors will emerge very strongly. So the market will find its winners. I have no problem on that.
The IT sector per se has got rebooted. Technology is changing, old technology is moving out. The buzzword is disruption and digitization. So what could be the face of Indian IT sector in 2020, 2021?
You could see new players emerge. I mean, IT was not thought of as IT services. They were available at cheap multiples at one point of time. But it changed. And so also it could change, that IT could become smaller, it could become highly advanced. And therefore, the jury is still out that whether this manpower-led IT sector is dead and gone. I don't think so yet. And this is because while the need for technology has remained constant, its delivery is changing. But the technology service providers were doing precisely this. There was always a technology, it was moving generations. And now also it seems to be moving a generation. In this generation move, whether the service companies will still have a role because they can see the generational change much better than we can. And whether they can create a business out of it, the jury is still out. And so at worst what may happen is that the growth may slow down. They will find a formula to limit their manpower cost, freeze the manpower. So I don't think the heavens are falling really on that sector. Maybe the kind of fantastic rewards that we have seen, I mean, they have not been coming for a few years, and maybe they will slow down. But I don't see that sector becoming irrelevant in a hurry. And they will always remain what we call the local issue, hedge sector. So that advantage will continue with them. Every time you see rupee weaken, a lot of people believe that rupee will continue to weaken 3 to 4% a year. So if they can grow at 8, 10, 12% and they can have 3, 4% rupee gain, yeah, they're all right.
But the definition of big four, TCS, Infosys, HCL Tech and Wipro, I mean, we like to call that these are the big four. Do you think the definition of big four could change in the next 5 years? New companies could be part of that big four?
I can't see them, but I like to believe that these surprises come. In the 90s, you didn't see Infosys and Airtel and Sun Pharmas of the world, but they always come. I think in a free world, I think the kind of freedoms that are growing, and the government's today's announcements also creating more freedoms. So you're seeing more freedoms for businesses to grow. And in that environment, the new boys, they are faster.
So what do you make of the new FDI laws? I mean, do you think this time, now that the gates have been opened, flood of dollars will start at least in sensitive sectors?
One does not know because it depends upon, I haven't really tracked that who are all waiting at the gate and who will jump in. But I think the totality of reform, totality of attitude in the country today is inviting. So the FDI has done well over the last 2 years, and I do not see any reason why FDI will not go up given this further liberalization. So I do not know about money just pouring in, but I think money has been growing, the money flow has been growing steadily, and I think it will continue to grow definitely.
Which is one government policy action do you think markets are underestimating the importance and impact of that?
I think market is generally right, but maybe slightly cautious, is on the infra spending. That the government has talked a lot about the infra spending and they are committed to do that infra spending. I think it will have a big impact. The market is right in terms of saying that look, we need to see the money on the ground. We want to see that translate into orders on contractors and subcontractors and money flow all the way. And so the market, having seen famine for so long, is probably right in estimating that. But I think that will make a big impact. What they're talking about, roads, railways, defense, transmission, the non-renewable, the renewable energy and things like that. I think all of that will have a big impact on the economy.
A real big surprise factor has come from an unexpected source, and that unexpected source could also be called disruption, Patanjali. No one thought what brand Patanjali could become, both in terms of market share and in terms of revenue. So is that India, the art of innovation, the art of disruption?
One of the many things, and I don't think that every Indian brand can hope to achieve what they achieved. And there's no use going into history that he was a yogi and what he did at personal level for people that created the huge credibility. So what Patanjali has shown is that the brand building was done by the founder. And therefore, his personal personality, sacrifice, effort, if you put a money value on it, they have taken the same number of years and effort and expense as any other company that would have. They're still subject to the rigors of distribution, quality, innovation, etc., the logistics and so on. So just substitute the amount of money that a regular FMCG company or a brand company spends on building all this by the effort that Swami Ramdev put by holding all his camps and making a huge personal effort. So otherwise it's just one more company. So I do not think that it's a revolution and it's a trend of some kind. You're not going to see someone like his person with his stature, personality, and the effort and the connect. So that's quite an exceptional thing.
There is a lot of debate about what is the real health of PSU banks. Cleanup has happened. They're looking healthier. They've managed to really, swallow the bitter pill, if I may say so. But what is your understanding of how deep-rooted the problems are, and how far are we away from the real recovery there?
See, the banks were the face of the system, and maybe they're getting all the brickbats. But whatever happened in the banks was due to a system. I think Uday Kotak said something brilliant, and hats off to the person. He talked about crony capitalism, and he also talked about crony socialism, that how more harmful is crony socialism. So the difficulty that you're seeing in the banks is the result of crony socialism. As long as we are reversing that, and when I'm saying we, meaning the system as a whole, which means the government, the Reserve Bank of India, the new kind of boards, and the social support, then let's clean up, it will definitely get solved. When the system as a whole decides to change direction, things will happen. So the problem of the bank has to be recognized as the problem of the political thinking, the way our governments were run, the kind of cronyism of one kind or the other that prevailed, and that was the result. If now we start changing the constituents, the factors, the drivers, I'm sure the result will also change.
But as an investor, is there an opportunity? Is it time to take that leap of faith now in PSU banks?
I haven't studied them deeply, so one must really do a grounds-up approach in like everything else. Every time you'll talk to me, I'll talk a bottoms-up approach only. So you have to take that. As an investor, and the role or the rigor expected of an investor is different from that of a patriot or a citizen. So therefore the investor has to be a lot more cautious because there are many, many uncertainties in that game. So subject to that, I think if somebody wants to play a systemic bet, I would think that's yes, it's open to that systemic bet. But please do your homework.
But again, because of technology, because of behavior, because of adaptability, the entire financial space is changing. You got small banks. RBI is now giving banks on tap, so to speak. Who will be the eventual winner in the banking space?
It's difficult to say, but I think banking is a simple business. All those who do banking by the book, they will win. And by the book is, I have diversified liabilities, I have diversified assets, I invest, I grow to the extent necessary and not beyond. And I just be a conservative, a bank. I will do well in whatever business I do. Yes, innovation is a given now. Technology is a given. So I don't think it's anybody can do without them. So both will happen. And I think several of our banks are capable of it. Those who will miss a trick will probably lag behind. So I think technology is like opening branches was 15 years ago. So technology is doing nothing but opening a branch with an individual customer. Just as that created a huge amount of flow of CASA, this, that, etc. I think the technology and a mobile app and things like that are replacing that physical world. So those who can simplify this look at the whole process that, oh, banking remains the same. Now it is a branch for an individual. And just I had a smart credit department which went into credit history, analysis, etc. I have to, speed that up also using technology. So therefore the banking at the core remains a simple business. These are tools that have come up. I got to recognize them, not get upset, not get, too worried or petrified of these new tools. Just understand for what they are, use them. Anybody who will use them will continue to win.
But if I look at the share of banks in the Nifty or the Sensex, they have a disproportionate share now, 35 to 36%. Do you think there is a threat to that, or the market share or the percentage share will only become higher and bigger?
See, the BFSI has to be 30 to 40% of all mature markets. I saw that as a big opportunity, and I remember to an LIC chairman many years ago, just shut your eyes and fill your buckets up. This is the way we will go, because this insurance hasn't got added yet, or it is indirectly represented, embedded in the other companies. So insurance has to come, pension has to come, money management firms have to come, housing finance is still growing. So all this is a part of BFSI. This bucket will be large always.
So the composition in terms of large, big banks or private banks getting lion's share now, they are getting large pools of the profit now. Do you think those trends are here to stay? Are these mega trends for another 5-7 years?
No, I wouldn't say that, because, for example, if ICICI starts taking its babies public, ICICI's market share will shrink. So also HDFC. So as I think the pie as a whole for BFSI has to remain large, and maybe can get even slightly larger from here. But individual bank stories will depend upon what happens. So I wouldn't make that trend.
Something which always has been very close to your heart is the entire governance issue. We've talked about it openly, and you've again been cited that if the governance standards are so low, society is not going to head anywhere. Crony capitalism seems to be coming out. There is a hint that government is trying to fix what has been a Raj problem, which is corruption. So in terms of an governance standard, do you think there is an improvement there?
I think in terms of the intent, clearly so. And to the extent that the theory says that, improve the fountainhead, the rest will change. The fountainhead seems to be doing well. The government is extremely vigilant, and we hear nothing at all happening at that level. And slowly that will translate into other areas. But there are some incongruities in the way our society has functioned for years, and we need to do a lot more. So therefore, I don't think the vigil should drop at all. And if at all, we have to make a greater effort to bring better governance. Take, for example, the response to Swachh Bharat. Has the country responded? Indeed, it has responded. But anywhere near that it will, gladden our heart? No. This is governance. This is something that a citizen benefits himself. There is no government that benefits from it, but the citizens are not responding to it. So maybe the whole follow-up mechanism, say between the government to the next level of leaders down to the citizens, that whole process, the structure of that kind of leadership where you translate a big vision into ground level is still not there. So because we haven't built enough institutions, we haven't created what we call layers and layers of leaders in our society, and that applies to all aspects, whether it is banking or whether it is technology, defense. In all areas we've been lacking behind. And I think as we create more freedoms, as we create better education system, I think a need for lot more, not just colleges and universities, but top class institutions is very, very necessary.
So true, so true. Really appreciate your time, and glad you could
My
join
pleasure.
us on this special forum. That's it. With that, it's back to the studio.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.